Hey guys, this video is on the Bombora trade, and what the Bombora trade is it is a stage three, beginning of stage three trade. If you're familiar with the basic cup and handle pattern, it's the start of the breakout from the cup lows. So again, we're always looking to the left to find trades breaking out to the right. We want to target stocks that have already demonstrated pretty good power on the left hand side of a cup. So we're looking for generally a Cat 3 breakout, cycle adaptive trendline breakout number 3, trendline breakout, actually a pullback off the trendline number 3, inside of a cup, and generally the lower right hand side of the cup will give us really good signals on the weekly bars versus the moving averages. A lot of people will say just use moving averages inside of the cup. If you go back and study a lot of big moving stocks, you'll find that it's very inconsistent about what moving average to use. Sometimes 200 MA works, sometimes 100 MA works, sometimes 150 MA works. But the one consistent thing is how the weekly bars line up over a several week period, and I'll show you what I mean by that. But basically, we're always looking to compile a list of the best performing stage one stocks coming back into a stage two consolidation, and where they'll set the lower right hand side of the cup. Again, we call that a Bombora trade. And so we build the watch list, and depending on how the market is, we may have periods where, for 1 to 2 months, there's really no big breakouts. It's just the nature of the market. It moves in cycles, and so we're moving stocks around on a watch list based on how the stage two consolidations are unfolding. So I'll show you some charts and show you the potential of being highly selective using the superior price action inside of a cup and handle pattern, stage two consolidations. And again, if you're focusing on the right trades, the big powerful moves on the left hand side of a cup, and you're being very selective about what stocks you're going to trade coming back into the cup, you can build watch lists months in advance until the stock gives you evidence that the bottoming action is done. So this is what we focus on. We focus on building watch lists. And there may be periods where we go a month or two where we don't have any really strong breakouts into a stage three on a power cup. So it's just the way it is. We're very selective about types of trades we'll take on. And I'd rather sit in cash, not have my money tied up in less than stellar trades, than have it tied up on a so-so stock that might keep me sucked into longer than I really want to be trading it. So the main purpose of our style of trading is to not have money tied up needlessly in unproductive consolidation zones. So we're going to be targeting stocks that have very little time between the time we enter the trade before they start their breakouts. So again, that's meat of the move trading. What you don't want to be trading is stocks that have another several weeks of testing, retesting support. Yeah, you can buy a breakout on a new high, and sometimes that's a pretty valid way to do it. Yeah, but if you can be in at a breakout inside of a cup at $6 versus $8, and the stock's going to run to $24, that's a 300% gain on your money if you get in at 6 versus a 200% gain if you get in at $8. So these are just little things that add up a lot at the end of the year when you put together all these powerful big trending stocks. So let's go ahead and break down a few charts, and you understand a little bit better about the Bombora and why it's one of the better trades, ones we look for quite consistently with our watch list building. So let's go ahead and break down some charts. Okay, first one here is Shopify, and this was a 2016 Bombora trade. It had a TM5 breakout about mid 2016. This is typical of IPOs. A lot of times there'll be a lot of hype around the IPO, but just because of the internal fundamentals of the company, it takes a little while for it to take off. So you have the initial IPO, and then about a year and a half after that, that's when the a lot of times the best stocks will start to kick in, the fundamentals, earnings, etc. will start to pick up, and so the cycles will set. This particular one, one of the key traits of a Bombora trade, let me go ahead and pause this and scroll back. Okay, so one of the key traits of a Bombora trade, again, we're looking for only the best patterns, so we're looking for breakouts of the right-hand side of the cup. But generally, once the key cycle is set, you're looking for pullbacks off of that. And because the moving averages are inconsistent as far as which one to use, 200 MA works great sometimes, other times not so much. What we're looking for is we're looking for about 3 weeks of price action to be above a lower pivot fractal, basically. So you want 3 weeks up here, and you want about a week off of the lower pivot. So we're always looking for, once we build our watch list, we're looking for the price action to perform higher lows off of the in the cup low. So we're looking for higher lows to come in. Even if there's lower highs, we want that price squeeze setting up, because that's where you get the explosive follow-throughs out of that. So this particular one had 3 weeks up, 1 week sideways, so you have a set right there. You have basically the TM2 plus off of the underside of the consolidation. And so the next opportunity right here, you have another 3 weeks above this pivot, this fractal, and you have 1 week right here. So you have basically, you have an opportunity around this $30 mark to get into trade. It ran quite a bit. I don't know, let me see, 150 or so. Let me scroll out a little bit here. 120 bucks there. I think it went another spike above the 150 bucks or so. So that's the potential of this. You get the right stock, and you get in on the pre-breakout of the cup. You get in at the right price. Again, if you get in 25 bucks, you're at 600% gain in a year and a half plus on that. Versus if you get in outside of the cup, 30 to 35 bucks, you have 400 or 500%, if that. So critical to watch how these set up and form. Again, we're always building watch lists of the best setups and looking for these opportunities where you have a 3 week fractal pivot off of the lows of the consolidation. Let's look at another one here. Okay, this one here is Fizz Beverage Company. And both FIZZ and Soda did very well back 2016, 2017. But this had a nice left-hand side of a cup. Again, 2 BMI, VR5, pull back in the cup. You had a TM2 cycle in the cup. And as you can see right there, you got this squeeze starting to come in. You had the slinky setting up. You had the TM6 off of the lows right here. And then you had an internal cycle off of that TM2I. So basically, again, situation where 200 MA was kind of sloppy. But what wasn't sloppy was the fact that if you drill down to the weekly action, again, if you had the weekly bars, you can see this plain as day, but I want to keep the clear picture here of what we're working with, daily cycles. So you got 3 weeks of price action above this fractal. You got 1 week here. So you got a 3-1 basically. And so you got an entry around 50 bucks, went to 120 bucks. That's 140% gain. And again, optionable stock. This will be mega mover on the options on that. And this one actually had a really good exit off of the TM3 cycle. North channel violation, missed it by just a few ticks. Very close to the top on that for that 140% gain on that cycle run. So again, 3-1, basically 3 weeks above the pivot fractal and 1 week on the right hand side of that, so we get in early on the trade. Let's look at one more. Okay, last one here is ISRG. This Bombora trade actually set up in 2006, 2007. This is one of our big winning stock trades from our previous Big Kahuna Trading Club iteration about a decade ago. And this one had a TM7 cycle off the lows, 2005 to 2007 setup, and broke out. This actually had this is split adjusted, so at the time it was around 90 to 100 bucks. So it must have had a 3-for-1 split somewhere along the line there. But the left hand side BMI very high, 8 BMI, VR5 off of that. You can see very stellar cup consolidation. The initial lows set around that 30 bucks, which was again around 90 bucks at the time. Was tested a couple more times, one brief fall down through that, and as you can see, the Bombora set, you had 3 weeks of price action above this pivot, 1 week right here. Again, you don't want to wait 3 weeks over here because you're up here, but you do want to make sure that you have a what looks like it might be the beginning of that next phase. Now it could roll back over, and at least at this point, if you're in it, you know what you're going to have a finite amount of loss, maybe below the consolidation zone. But as you can see, if you're at the right entry on that off the cup lows and the Bombora is set, generally get pretty quick follow through. You're very close to the lows of a consolidation, and again, you can see how sloppy the 200 MA entry, if you just blindly said I'm going to buy when it hits the 200 MA. Again, you're there, you're stopped out, you know, you're below, you don't know where the hell it's going. So this is just kind of the way it works out. You just can't rely on indicators so much as you can on actual price bars. So again, you got your TM7 off the lows, you got a very nice run, 300% plus, and again, options on this were just amazing. We had one guy in the club, I think he had actually bought the options before he had joined the club, and somewhere down in here, and at this point that he had joined the club, he had just sold the options. I think he turned $5,000 into about 90. No, it was actually about 105,000. He told me. But when he had joined the club, whether he had sold that week or just prior to joining, he had sold it because it had a nice big gap up, and at that point, I was saying you got a nice little trend ahead. Again, there's some cycles here. No reason to sell. If you're in at a good price down here, just hold on. And again, that I'm sure that 105,000 he made could have been 200 to 250,000 easy if he had hung on to it with the options. So that's just the way you got to really look at the big picture here. And you got a real strong cup, and you got channel lows. So you're gonna target some extensions of a channel, generally at least one or two. And as you can see right here, hit very close to the, actually just ran right outside of that second channel, so that 2x of the TM7 cycle. So this is the power of getting in early, and as you can see, getting in that $32 mark versus waiting for a cup breakout at 40 bucks. You're 200% gain here versus 300% plus paying attention to the weekly bars on that a low set in that Bombora trade. So hope this is all making sense. Again, we build lots of watch lists of the best power stocks in the market, and if you want to click the subscribe button if you think you got something good out of this, I'd greatly appreciate that. And stay tuned, get more videos and opportunities to learn what we're doing and get involved. Okay, have a good one. Take care.